I'm going to take a company that did not do such a great job, and I'm going to talk about GoPro. And so, based on just profiling, like we talked about in the first half of the show.
Why are you hating on GoPro, Dylan?
Oh, I mean, I'm an Ambrella shareholder, so I want to see GoPro do well.
Yeah.
But based on what we talked about in the first half of the show, by all indications, GoPro is in that growth phase, right? And they should be fueling
They
R&D.
just went public.
Yeah, they went public within the last 2 years.
They do not have a dominant market position. They are not minting cash flow.
They're in nascent consumer tech market. But in the fiscal Q3 call last October, they announced, our board of directors has recently approved a stock repurchase plan of up to $300 million. Our newly authorized Class A share repurchase program runs for 12 months, allowing us to remain opportunistic buyers and return cash to shareholders. So at the time that they announced this was late October, they had about a $2.5 billion market cap, trailing PE in the mid-20s. So actually, given what their growth had been, not crazy. And I do understand... I think they were at 16% year-over-year growth in 2015 overall. I do understand seeing that PE, seeing that valuation, and wanting to be a little bit opportunistic and having the flexibility to do that. But I do think there are some major red flags that should have been present at the time.
Especially to management.
Yeah, and so during that announcement, this was also the same quarter that they missed guidance for the first time as a publicly traded company. So they...
Dun, dun, dun. And very early in their history as a public company.
Yes.
So, yeah.
And Woodman, Nick Woodman, the CEO, said, in attributing that misguidance, had said, looking back, we now believe that we underfunded marketing in the second and third quarters of the year, which impacted demand. To address this, we're taking a more aggressive advertising approach in the fourth quarter, which includes a return to television following a 1-year hiatus. So...
Not good.
Yeah. You're talking about how you should have allocated internally to, selling and advertising. And then you're also announcing that you're going to be possibly buying back shares. It just seems like you're misprioritizing where money needs to be going. Of course, the following quarter, Q4 2015, they went on to miss guidance again. And ultimately, in that call, they kind of provided an update on what the repurchase program was looking like, how much had been executed.
This is going to be bad.
So they said, we've repurchased 1.5 million shares at an average price of approximately $23 for a total of $35.6 million through December 31st. We have a remaining share repurchase authorization of $264.4 million. And if you remember correctly, they IPO'd for right around $24.
And I also know that they're about 13 or 14 right now.
Yeah. So they didn't get a huge discount on what they had originally sold those shares for.
Right.
And in the, so they also, based on that cost basis, clearly executed that first 10% of the share repurchase authorization immediately after they announced it.
Right.
And the shares are down, the ones that they bought, 40% since they executed it.
The dichotomy here between this, and by saying this, I'm not advocating that GoPro start an online bookstore, but the dichotomy there between them and Amazon that literally says, we ain't buying back any shares, we're not going to pay out dividends, we're just going to keep investing in our operations until we win.
Yeah.
Big black and white difference there.
And I think I do understand, a lot of tech companies issue equity as... they do share grants as part of their compensation. And I do understand wanting to have this as a way to mitigate against shares outstanding getting crazy out of hand and diluting existing shareholders. But this is not a company that is entrenched in this very stable space. Like I said, they're in consumer tech. They're making pushes into virtual reality capture and drone capturing. Both of these markets barely scratch the surface. It just seems odd to me that they're prioritizing something like this. And, I mean, the fact that they timed it so poorly shows that management doesn't have a very good finger on the pulse of what's going on with the business.